Good morning, and thanks for tuning in to today's Daily Crypto News Podcast. We have a packed show for you today covering everything from XRP's potential price surge to the latest developments in crypto regulation.
That's right, and we're starting off with some exciting news for XRP holders. According to technical analysis, the token has formed a descending triangle pattern since its peak near $2.09 in early December. What does this mean for investors?
Well, if history repeats itself, a bullish breakout from this pattern could lead to a 40% or more price increase, resuming the upward trend from early November when XRP was near 50 cents. This is huge news, especially considering the token's already impressive performance over the past few months.
Some analysts are attributing this potential surge to the Trump effect, which is boosting Ripple sentiment. It's worth noting that this isn't the first time we've seen a high-profile figure impact the crypto market. We've discussed the influence of Elon Musk's tweets on Bitcoin and other tokens in previous episodes.
Exactly. And it's not just XRP that's feeling the effects. The entire crypto market has been experiencing increased volatility in recent weeks, with some tokens seeing significant gains while others are struggling to stay afloat. We'll be diving deeper into the market trends and analysis later in the show.
One of the key factors contributing to this volatility is the ongoing debate over crypto regulation. We've seen some major developments in this space, with governments around the world weighing in on how to approach the issue. We'll be discussing the implications of these developments and what they might mean for investors.
We'll also be exploring the theme of institutional investment in crypto, which is becoming increasingly important as more mainstream players enter the market. With the rise of decentralized finance and the growing demand for digital assets, it's an exciting time for the industry.
That's right. And as we discussed earlier, XRP's potential surge is just one example of the many opportunities and challenges facing investors in this space. We'll be breaking down the latest news and analysis throughout the episode, so be sure to stay tuned.
Before we move on to our next story, I want to remind our listeners that the crypto market is highly unpredictable and prices can fluctuate rapidly. As always, we encourage our listeners to do their own research and consult with a financial advisor before making any investment decisions.
With that said, let's take a closer look at the technical analysis behind XRP's potential surge and what it might mean for the broader market.
Speaking of market trends, I'd like to dive deeper into the technical analysis of Bitcoin. As we mentioned earlier in the show, despite the short-term volatility, experts like Katie Stockton believe the long-term outlook for Bitcoin remains bullish.
That's right. Her analysis highlights the stochastic oscillator on Bitcoin's weekly bar chart, which flashed an overbought sell signal for the first time since mid-pill. Typically, this signal suggests that the asset will enter a range-bound period.
Range-bound meaning that the price of Bitcoin won't experience significant movements in either direction, at least not in the short term. However, this doesn't necessarily negate the long-term bullish outlook. In fact, Stockton argues that this period of consolidation can actually be beneficial for the asset.
Exactly. It's a chance for the market to catch its breath and for investors to reassess their positions. Considering Bitcoin's impressive 120% year-over-year growth in 2024, a brief period of consolidation might be necessary to sustain the long-term uptrend.
That's a great point. We've seen this pattern play out before in the crypto market. A strong rally is often followed by a period of consolidation, which ultimately leads to another leg up. The question is, what are the key levels to watch in the short term?
Well, according to Stockton's analysis, the $40,000 level is crucial. If Bitcoin can hold above this level, it would suggest that the bullish trend is still intact. On the other hand, a break below $40,000 could lead to a deeper correction.
And what about the long-term outlook? What are the key drivers that could propel Bitcoin to new highs?
From a technical perspective, the trend remains bullish as long as Bitcoin holds above the 200-day moving average. Additionally, the Relative Strength Index, RSI, is still in bullish territory, indicating that there's room for further upside.
It's also worth noting that the fundamental drivers for Bitcoin remain strong. Increasing adoption, improving infrastructure, and the ongoing theme of decentralized finance, DeFi, all contribute to the asset's long-term potential.
Absolutely. As we discussed earlier in the show, the growth of DeFi has been impressive, and Bitcoin is well-positioned to benefit from this trend. With its strong brand recognition and established network effects, Bitcoin is likely to remain a key player in the crypto market.
Well, it's clear that the short-term outlook for Bitcoin is uncertain, but the long-term picture remains bullish. As always, it's essential for investors to stay informed and adapt to changing market conditions.
And we'll continue to bring you the latest updates and insights to help you navigate the complex world of cryptocurrency.
I think our previous discussion on the current market trends really sets the stage for our next story. We were just talking about how the recent Fed minutes have been causing ripples in the market, and it looks like that's had a significant impact on Bitcoin ETFs.
That's right. The latest numbers are showing that Bitcoin ETFs have suffered a massive $582 million net outflow. To put that in perspective, that's the second highest tally ever. It's clear that investors are getting spooked by the renewed US inflation fears. But,
And it's not just Bitcoin ETFs that are feeling the pinch. Ether ETFs also saw substantial outflows, with $159 million withdrawn on Wednesday. This is likely a response to the increased bond market volatility, which is making investors think twice about their positions in the crypto market.
if we look at the price action, it's clear that the market is getting nervous. BTC dropped as low as $92,500 at one point, which is a pretty significant dip. And with the Fed minutes showing concerns about the inflationary impact of Trump's policies, it's likely that we'll see more volatility in the coming days.
Building on what we discussed earlier, it's interesting to see how the market is reacting to the Fed's concerns about inflation. It seems like investors are taking a more cautious approach, which is understandable given the current economic landscape.
Speaking of caution, it's worth noting that the US-listed spot Bitcoin and Ether exchange-traded funds have been seeing significant outflows across the board. This could be a sign that investors are losing confidence in the market, at least in the short term.
I think that's a fair assessment. The question now is, what does this mean for the market moving forward? Are we going to see a prolonged period of volatility, or will investors start to regain their confidence?
It's hard to say for certain, but one thing is clear: the market is going to be keeping a close eye on the Fed's next moves. If they do decide to cut rates, it could be a game changer for the crypto market. But for now, it's a wait-and-see situation.
Well, we'll be keeping a close eye on the situation and bringing you updates as more information becomes available. In the meantime, it's clear that the market is in for a wild ride.
And that's not all. We've got another big story developing in the crypto world. Stay tuned for our next segment, where we'll be diving into the latest developments.
Building on what we discussed earlier about the increasing institutional investment in crypto, it's interesting to note that global economic trends are starting to put pressure on crypto prices. The rise in government bond yields is a key factor to consider.
That's right. If you look at the UK, the 30-year gilt yield has reached its highest point since 1998. This sharp increase in interest rates didn't seem to affect crypto's price rally in late 2024, but it appears that's no longer the case.
For months, rising rates haven't seemed to hold back crypto prices, but it seems that investors are now taking notice. This change in sentiment could be attributed to the fact that investors are reassessing their risk tolerance in light of the rising yields.
Exactly. When interest rates rise, it makes traditional investments more attractive. This could lead to a shift away from riskier assets like cryptocurrencies. However, it's worth noting that there is an exception to this global rate action: China.
China's yields are actually decreasing, which is an interesting anomaly in the global trend. This could potentially create an opportunity for investors looking to diversify their portfolios and take advantage of the lower yields in China.
Speaking of diversification, it's essential to consider how the rise in yields affects different types of cryptocurrencies. For instance, some cryptocurrencies are more closely tied to traditional markets and may be more susceptible to changes in interest rates.
That's a great point. Investors need to be aware of these dynamics and adjust their strategies accordingly. It's not a one-size-fits-all approach when it comes to navigating the impact of rising yields on crypto prices.
Absolutely. As the global economic landscape continues to evolve, it's crucial to stay informed and adapt to the changing market conditions. We'll be keeping a close eye on the situation and providing updates as more information becomes available.
In the meantime, it's essential to remember that the crypto market is known for its volatility. While rising yields may be putting pressure on prices, it's impossible to predict how the market will react in the short term.
That's right. As always, we recommend doing your own research, staying informed, and being cautious when making investment decisions. We'll be back with more news and analysis after this break.
All right, so we've been talking about the drama unfolding between FTX's bankruptcy estate and Backpack Exchange over the alleged unauthorized sale of FTX EU. This development certainly raises questions about the legitimacy of the deal and what it means for FTX customers.
Yeah, and it's interesting that Backpack claims they had permission from the Cyprus Securities and Exchange Commission back in December 2024. However, FTX's bankruptcy estate is saying they never gave the green light for the sale. It's quite the discrepancy.
Exactly. This reminds me of our earlier discussion on the complexities of crypto regulations across different jurisdictions. It seems like Backpack is trying to argue that they had the necessary approvals, but FTX is saying otherwise. It's a classic case of he said, she said. It's
Right, and it highlights the challenges of dealing with international regulations and bankruptcies. We've seen this before with other crypto companies where different regulatory bodies have conflicting opinions on how to handle certain situations.
That's true. Now, let's think about what this means for the market. We've been seeing a bit of a downturn lately, and this news isn't exactly helping to boost investor confidence.
Yeah, it's definitely not what the market needs right now. Investors are already spooked, and this kind of uncertainty is only going to make them more cautious. I think we can expect to see some volatility in the coming days as the situation unfolds.
Agreed. So, what are the key takeaways from today's news? Firstly, the FTX bankruptcy estate is disputing the sale of FTX EU to Backpack Exchange, citing a lack of authorization. Secondly, Backpack claims they had permission from the Cyprus Securities and Exchange Commission, but FTX disagrees.
And thirdly, this situation highlights the ongoing challenges of navigating international crypto regulations and bankruptcies. It's a complex issue, and we'll be keeping a close eye on it as it develops.
Absolutely. In terms of market outlook, we're expecting some short-term volatility as investors digest this news. However, it's worth noting that the long-term fundamentals of the crypto market remain strong.
That's right. We've seen this kind of drama before, and the market has always managed to bounce back. So while it's certainly a concerning development, it's not the end of the world.
All right, that's all for today's show. Thanks for tuning in, and we'll catch you tomorrow with more updates from the world of crypto.
Until then, stay informed and stay vigilant.